Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 24th of August. Yesterday we posed the question, has gold and silver market topped out? Have we seen the bottom in the equity markets? Well, today gold and silver confirmed that they have indeed topped out for the time being. The equity markets are another story, and I'm not quite sure that we have seen a bottom put in place for those markets just yet. You may want to take a look at a post I'm going to put up in the early hours of Thursday morning. That's the 25th of August. Most, if not all, markets go through 7 steps, and it would appear that gold has met all those criteria. This post is invaluable, in my opinion, for any serious trader. I think you'll find it interesting and at the same time very timely. This is how markets act over and over again, and you should make yourself aware of these 7 steps so you will recognize them in the future. So don't forget to read our blog first thing Thursday morning. It's a very timely and informative article that I think you'll enjoy. So now let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So here we are on my home page. As always, I use the same criteria, and of course silver is a big move, and you can see it right here. I'm going to show you some interesting things on silver in just a moment, but let's go to the portfolio. And here we are. These are the markets we're tracking. I put a couple of other things in. We talked about the bank stocks being very, very weak. Still want to be bearish and short the bank stocks, even though we've seen a rally today. HP, on the other hand, you can see that's a disaster in the making. And the SKF, which we've had a lot of talk about, I want to show you how that market went down to 77.06 and came back and is actually just down a little bit on the day right now. So let's go with the S&P 500 first of all. And we're looking at a 1-month chart. I want to go to a 3-month chart, and you can see the action. Today's action is right here. We hit the high. Now what I want to show you, in fact, let me go back to a 1-month chart because we talked about this yesterday in the comments and also on the charts. So we're going to look at the Fibonacci. We're going to drag it from the highs here down to the lows, and you can see hold on, let me just get this right so it's perfect. And there we go. 75.20, 175, 1175 is pretty much where we thought it would go. The market hit today a high of 1175.23. So that was an area we felt the market would find resistance, and of course so far it has found resistance, and it looks like it's going to go lower. This pattern we're seeing in the S&P 500, let me take this off the screen, I don't think this is a positive pattern by anyone's imagination, and I think we can see this market just continue. If we take out these lows, which is the 1120 area, which I think we will do, a close down below these closes here, I think this is going to be very, very negative for the market. Obviously, everyone's keen on what Ben Bernanke is going to come out with on Friday. Is he going to be a helicopter ban and keep dropping money in the markets? I think either way, it's not going to make a lot of difference because I think the markets are so untrusting of anything that happens with the Federal Reserve or the government right now. I think people just want to be in cash. I think the disaster in gold today, not disaster in gold, that's the wrong word, but a lot of liquidation out of that market, and I'm going to talk about that in just a moment. So let's go to our next market, and the next market we'll be talking about is, in fact, the silver market. And you can see quite dramatically, we talked about the doji line, the negative engulfing line yesterday, and of course today's action is negative. And I want to show you something else here that we want to share with you, and that is 2 things. One is the doji, the Fibonacci, we'll put that on, and we'll just draw that right down here to there. So you can see we're pretty much back down to an area, and we'll go to a 1-month chart so you can get a closer picture. 39.79, we're 39.97. This is where the market, the silver market, should find support. But I want to show you a longer-term Fibonacci count that I think is just as important, that I think you'll find interesting. So you can just simply take the tool right here, drag this up to the highs here. This is very easy to do, as you can see with MarketClub. And we drag it to the lows, which are right here. And you can see pretty much the 61.8% retracement was right around these levels here, and that's exactly where the market stopped and has turned around. So these Fibonacci numbers we share with you and talk about on our show, our Today show, and also this evening show at 5 p.m. Be sure to watch that. Are very, very important. And this is what traders, professional traders, look at all the time. And if you're not looking at these levels and know where they are, you're really at a disadvantage. And I don't want that to happen. So let me just take this off the screen take our indicator off altogether and close that up and just take that off and go to our next market. And this is, in fact, I want to put this, do a line chart just to give you an example here, just to, very simple. And we'll go to our next chart, which is gold. And gold, you can see, has had a big pullback. We were talking about going back to the 1800 level. This is when the market was trading probably around 1870. The action today certainly has got to be, and let me go into a shorter period of time, so maybe 3 months. You can see we've turned down, we've gone below the parabolic, which is now, the price is below there, meaning the trend is probably down. We've corrected a very heavily overbought condition. We're heading down to a potential oversold condition. Now, this is what you have to remember. This is what I want you to remember is, look, our trade triangles, we got out, short-term traders got out of this market yesterday thanks to our trade triangles at 1840. That's, what are we trading? That's $72. That's $7,200 on one contract of gold, 100 ounces. So again, you want to read the post we're going to put in tonight or first thing tomorrow morning. First thing, I mean, like 1 o'clock in the morning Thursday, Eastern Standard Time. Read that post about the 7 steps of every market in gold. Follow those steps very, very closely. You'll find it fascinating. Also, as you know, we've been looking for a high period during Q3. Certainly, we're in Q3 now, and I think we really should be very careful. But we also want to recognize that the trend, the longer-term trend, from 1430 based on our monthly trade triangle is still positive. So we want a place to look to buy this market. Now, two things, I want to see two things happen. One, I want to see the market continue, maybe get into an area like this where we're oversold, possibly make a bullish divergence, and then some other signals to come in with our daily trade triangles and so forth. So let's see how that plays out. But generally speaking, short-term traders should be out of this market. Long-term traders should be there with stops. I mean, you have to understand this market went up almost $400 from July 4th. That's a huge move by anyone's imagination. So let's stay really tuned to this market. Watch the show tonight. We'll be doing more of an in-depth analysis of gold, but there's lots going on. Lots of opportunity to make money, but you have to be smart about it. So let's go to our next market, and that's going to be the crude oil. I'm going to put it back into a candlestick chart. Now, we've pulled back up. We're right around the 61.8% Fibonacci retracement from this level to this level. In fact, I'm going to put that in for you, so you see I'm not making this stuff up. It's a definite way for you to look. So you go on the highs, pull down to the lows, and you can see right around those levels, the 85.52 level was a 61.8% retracement. We went a little bit further than that. It's not unusual for a market to do that. However, this is where I think the crude oil market should have problems, and we'll see if it does in fact have problems. So let's just take this off the screen and go to our next market. We are generally negative on crude oil for the moment because the trends, our weekly and monthly, are still negative. Our daily short-term traders should be out of this market, and you can see I'll just put that's where it came in, and at 84.80 right here, you should be out of the market after taking a nice profit on that position. So let's go to our next market, and that's going to be the dollar index. I'm just going to put a line in here. I looked at this earlier, and I said to myself, let me take everything off the screen because I think it's really kind of interesting to see just how boring this market is. When I hear about commentary on, the dollar's dropping, it's getting under pressure, it really hasn't done that. It's basically been flat. You can see really since May of this year, it hasn't gone anywhere. So with that, it would mean as though everything else is still very, very negative in terms of the currencies against the dollar, because the dollar should be negative, but it's not. It's really flat. In the 73.50 level, which we've talked about on this show, is key support for this market. Once that gives way, if it gives way in fact, it'll be a different picture. But then you can look at the big picture on MarketClub. Just max this out. You can see we're sort of hanging around these levels. So if you go back to really all the way back to April of 08, the dollar is actually higher against a basket of currencies. So let's just look at the markets for what they're really doing as opposed to what the pundits are saying. And right now you're trapped between 76 on the upside and 73.50 on the downside. That's the dollar index as we see it. Let's go to our next market, which is our inflation watch. And that's I'm going to put this, let's get to a closer level and go to our, as you can see, I think that pushed the market up today. But again, this market looks like a double top potentially. I think you can see this market pulling back down. It's still, if we put our trade triangles on, still negative longer term, 335.10. The market's trading at 333.08, 06 rather, and it's still negative. So let's wait until the trend changes and then make that change with the market. You know, my bias is towards inflation, but the reality is the market's not telling you that. At least this index, which tracks a number of raw commodities, one is crude oil, food, livestock, so forth and so on, raw materials, is not showing that right now. And I think that's the important level to look at. And if you go max out on this, you'll see a picture where we've had the pull up. In fact, let's do this. I haven't done this on this market so far, but let me just do this. We'll put the Fibonacci in here. And look at that. By golly, look at that. Right on the highs, and it's still in a defensive mode. And I think you're going to have to, let's do one more thing on that, by the way. Let's just take that off, put this on. That's our trend line tool. So basically, that's certainly a support level that's going to come in around 300, maybe a little at 310, a little bit higher as we space out to the right. So let's see how things work out. But hey, this is Adam Hewison. But if you have a chance and you will want to get some one-on-one Market Club personal coaching, give the number on the screen a call, 1-877-219-1482. It's a free consultation, and I think you'll really, these are times when you really need a personal coach. We're going to show you a lot, obviously, with our 1 p.m. updates and our 5 p.m. shows, but having a one-on-one conversation with a personal coach can really help you learn the Market Club methods and ways to protect your money and make it grow, not just in 2011, but in 2012. Hey, this is Adam Hewison. Thanks for stopping by. I'll see you at 5 p.m. today, so don't miss the show. 5 p.m. Eastern Standard Time, Market Club TV. Be there.